Welcome to Morningstar. Thematic funds are getting increasingly popular amongst investors, and with me to shed a bit of light on these products is Kenneth Lamont, Senior Analyst for Passive Strategies at Morningstar. Kenneth, equity funds have suffered massive outflows so far this year. Can we see the same trend for thematic funds?
Well, as the rest of the equity fund universe was bleeding assets, remarkably, thematic funds were actually are sort of up for the year. They have net, well, not up. They have net inflows over the first 3 quarters of the year, which shows a remarkable resilience, especially considering that the vast majority of these funds have a growth exposure, and many have performed worse than the broader market.
Right, so that's quite a striking contrast, especially considering that many people consider these thematic funds to be very trendy. So we might expect them to experience even stronger outflows than equity funds in general. Why do you think that is?
Well, I think it's worth unpacking the word trendy there. I think perhaps that's a word that would come to mind when many investors look at these funds. And indeed, it's fair. In some cases, trend is in the name of the fund. They're tracking these sort of secular shifts in society or technological advances. But actually, in our most recent paper, we looked a little bit more closely at what that might mean and sort of unpacked that a little bit. And actually, we were surprised by what we found, looking at the global thematic numbers, so that's active and passive funds, over 1, 3, 5, 10, and 15 years. These funds were actually less likely to close, which was very surprising. And again, when you couple that with this, it's a recent discovery that actually when even the market's sort of heavily down, these funds have suffered a lot, that actually you haven't seen investors stampeding for the exits. And I think that shows a surprising resilience for that these funds have shown, and perhaps they're not quite as trendy as some investors would have thought. And the reason for that really it appears is that investors are really looking at these for the long term, or at least some investors are looking at these investments for the long term. Most of these themes that they're investing in are long-term themes, and the rationale for investing in them is the same now as it was 6 months ago, as it was 2 years ago. So I assume investors are waiting for the next bull run to sort of carry them forward again.
That's a very interesting observation. But if we dig a bit deeper into these different themes, what are the most popular ones amongst investors and also the best performing ones during 2022?
So in Europe, the most popular by assets is broad thematic, and these are funds which can explicitly invest in the full range of themes as and when they see fit. These are often sort of replacements for core holdings in a portfolio. Second most popular, again, this won't surprise anyone, would be energy transition. So a lot of the story here and the popularity of themes is interlinked with technological and ESG developments as well. In terms of inflows, we've seen. I mean, it reflects what's sort of going on in the market. So some of the smaller themes that have seen larger inflows include food themes, for example, which again wouldn't surprise anyone considering the global food situation when you're talking about Ukraine and developments there. So. Really, when you see the performance of these themes, you can actually see them playing out in the global economy as it happens.
Yeah. So on a final note then, are there any risks with investing in thematic funds?
There certainly are risks. In our recent paper, we showed that globally, 9 out of 10 thematic funds had a 5-year standard deviation higher than the global equity benchmark, which again shouldn't be too much of a surprise. And in many senses, these are risky by design. But risk is an interesting concept. For example, if you reframe this, if you're looking to expose yourself to a given theme and you buy a single stock, you're taking on a lot of, as we would say, idiosyncratic risk or single stock risk. But by buying a basket of, let's say, 30 or 40 stocks which track that theme, you're actually diversifying away some of that risk. So what is in isolation still a risky investment compared to a broad equity index, could actually be the less risky option. And I think it's also important to say that you really want to understand where these fit within your portfolio. Something that is high beta or sort of higher risk when added to a broad portfolio may actually decrease risk overall if it's imperfectly correlated with some of your other investments.
All right, thank you, Kenneth. And until next time, I'm Joanna for Morningstar.